What if I told you real estate is down 90%? And the weird part is, nobody's talking about it. This is one of the most misunderstood concepts in the world today. And there's $350 trillion of money that's been stuffed into real estate, assuming that home prices only go up. But what's interesting is that Larry Fink, the man who engineered this $350 trillion real estate bubble in the 1980s with the creation of the CMO, he might be quietly exiting the housing market and buying something else. Today, we're breaking down how the American dream has failed for the entire world, why tokenization is real estate's last gasp, BlackRock's strange involvement in this market, and why the Fed's next move could send even more capital into Bitcoin. Welcome back to Simply Bitcoin's Satoshi, the show where we cut the noise and bring the signal for Bitcoiners. I'm Sophie. Grab your coffee, stack your sats, and let's get into it.
The problem that we've got from a societal perspective is that with traditional finance, Wall Street has been able to, and this is back to, say, Larry Fink and what he did, in the 80s with monetizing mortgage-backed securities, both commercial, residential. If you play that out full forward, 2008, that leads to the global financial crisis where you're literally giving, strawberry pickers in Southern California $1 million mortgage. And it's like, what could possibly go wrong here? Now, that led to an overinflated property price, and it led to basically people being bankrupted, handing back the keys, and the no recourse lending in the US. That led to a global financial crisis because everyone had plowed their money into that because they wanted a return. That led to the financialization of basically social assets that Main Street use. That's not a good thing to be doing from a societal perspective because there are real life consequences for financializing the assets that we use and live in.
Before we talk about the roots of Larry Fink and the CMO markets in the 1980s, let's explain this strange concept. How exactly is real estate down 90%? It seems like it doesn't make sense, but let's start with the simple math behind the headline. Everybody says housing only goes up, but that depends entirely on what you measure it in. In US dollars, home prices are at record highs, but when you price them in Bitcoin, the world's hardest asset, the story completely flips. Back in mid-2020, the median new home price was about $317,000. Bitcoin traded near $9,100, which means a home cost around 34.6 Bitcoin. Fast forward to today, and the median price of a new house is $410,800. Bitcoin? $121,000 at the time of this recording. That's only 3.4 Bitcoin per home, a 90% decline in Bitcoin terms.
Why would you buy a house when you can buy Bitcoin instead? You buy a house, you have to pay property tax. You buy a Bitcoin, done. Unless you sell it. You haven't got to pay property taxes every month. The government can't take it from you because you lost it in a boating accident. Plus, you get a higher rate of return. Plus, you're geographically free. Plus, you can liquidate it instantly without waiting years to sell it on the market.
Real estate didn't crash in dollars, but it seems that the dollar has been crashing against Bitcoin. See, change the yardstick, change the story. And no, this is not investment advice. Bitcoin is volatile, timeframes matter, and housing does have its place. I mean, people do need a place to live. But if the last 5 years have shown any signal, it's that hard money could quietly become a new safe haven. This is the reality catching up to real estate. Here's where it gets spicy. Even the old guard looks like they may be coming to the orange side. Almost 2 years ago, Larry Fink called Bitcoin a flight to quality.
This rally is way beyond the rumor. I think the rally today is about a flight to quality with all the, all the issues around the Israeli war now, global terrorism. And I think there's more people running into a flight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
Since then, BlackRock's IBIT ETF has grown into their most profitable fund ever, approaching $100 billion AUM. What is AUM? I don't need to know that. I stack sats. That's not a side bet. That's real proof of work. And like clockwork, the copycats followed. VanEck just published a report projecting Bitcoin could reach half of gold's market cap, roughly $7 trillion in value. And even Tether, the world's largest stablecoin issuer, just added 8,888 Bitcoin to its reserves. Angel number. Worth nearly $1 billion and pledged to convert 15% of its future profits into Bitcoin. So let's recap. The biggest ETF issuer on Earth, BlackRock, a top gold manager, VanEck, and the largest stablecoin network, Tether, are all now structurally long Bitcoin. When capital allocators this big start treating Bitcoin as the new base layer of value, you're not watching speculation. You're possibly watching monetary migration. Real estate has traditionally been the ultimate safe haven store of value, maybe except for that time in 2008, but we're not going to talk about that. But that was when money itself was a little more stable. Listen to what billionaire Ricardo Salinas has to say about real estate when compared to Bitcoin.
For most people, saving is in the form of a house. And it's not a bad saving, okay? It's not bad because the asset doesn't go down. It's just that asset compared to Bitcoin doesn't stand a chance, right?
Go down, yeah. Right.
Because you can always make more houses.
Yes,
Bitcoin, you can't make any more.
that's right.
And you can't take the house with you if something happens. And, you know, you get the property tax and you get the maintenance and da-da-da. You know, Saylor has done an excellent job of pointing out the weaknesses of real estate investment versus Bitcoin. But of course, also people need to have a house where to live, and you know that's different. You know, it's not a bad, it's a good investment. You use a house for living. Now, if you want it as an investment, it's different.
Wealth recognizes wealth. Like Mr. Salinas mentioned, Michael Saylor put it bluntly in a recent interview.
I know wealthy people. They own 16 estates on the Eastern Shore, and they live in 2 of them. Like, why do they buy them? They land banking. What does that mean? Well, the guy makes a lot of money every year, and he doesn't want to put it in a savings account, so he goes and he just buys a cool piece of property, and he buys another one. Well, okay, it sounds good, but here's the problem. The guy buys up the beautiful pieces of property, and so you can't afford it.
Right.
And if the rich guy wasn't buying up all the beautiful houses, they would cost half as much, and you could live in a beautiful house. So here's what happens. Some rich dude has 27 houses that are empty. You don't have a beautiful house. You have a family. Your kids, your dog could use the beautiful house. The rich dude doesn't even want the house. He just wants a long-term capital preservation strategy, right? And so that's a perverse incentive and a distorted economy. That's broken. That's broken money. That's because the rich dude is using an estate on the Eastern Shore of Maryland as a piggy bank.
Yep.
Huh? But the estate doesn't get renovated. The house is falling down. There's a beautiful pool on the water, and you could have a great family picnic there every Sunday, but it's not going to happen because the rich dude has 16 other houses. He just bought that house because he thought it was a good investment. Okay, that's wrong.
And for younger generations, it's not looking pretty. The broken system Saylor describes makes it so Gen Z and millennials are effectively locked out of home ownership. Why? Because the government can't stop printing money, and there's a false illusion that the value of homes are rising while wages stay stagnant. And the unbelievable part is that the Fed is expected to cut rates again this month, which means more cheap credit, more inflation, and fewer real returns. Even if we put all that aside, can this generation really afford to take the risk? As one meme puts it, you think you own your house, but the Fed still owns your wallet. All right, before we dive into how this shift could rewrite real estate entirely, here's how to make your Bitcoin actually work for you safely. If you're stacking sats, you need Bitcoin-backed services you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest, no credit checks, funds in 24 hours, no monthly payments, repay whenever you want, and proof of reserve reports verified by a top accounting firm are published every 6 months. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. When you sign up with Simply Bitcoin, you get 25 basis points off your first loan. Learn more at learn.ledn.io/simply. Now, let's get back to the show. Even after all that, Bitcoin still might be undervalued. Bloomberg's Lisa Abramowicz recently noted gold's parabolic move towards $4,000, and history suggests Bitcoin often follows gold's lead when the system looks shaky. So here's the trade-off, purely as an observation. You can buy a home, maintain it, pay property tax, and maybe earn 6 to 8% yearly. Or you can hold Bitcoin, take it into self-custody, and let the protocol do the work. As Joe Consorti joked, the opportunity cost is starting to look obvious. The question isn't, is Bitcoin risky? It's how risky is it staying in the old system?
When you think of something like real estate, you guys want to know what the risk is? Turn on your local news. That's risk. When people say I've levered myself to buy a bunch of Airbnb properties and that's how I'm going to save and build my wealth to build for retirement and finance my family, there's significant risk in that. Significant risk in property taxes, in upkeep and natural disaster, in future demand to rent the property, in interest rates. The counterparty risk is significant, and people underestimate that. They tremendously overestimate and overvalue the risk in Bitcoin and misunderstand it entirely. It's not risk, it's volatility.
And now we reach the final act, tokenization. Real estate's Hail Mary rebrand.
And I think real estate's a big opportunity. I think it's smart that they're aggressively pursuing that because everyone wants access to high quality real estate, particularly the mass market.
But isn't it true real estate is actually more complex? I mean, they tried this before. It hasn't really worked.
It has some similarities to a private company, actually. If you think about what a real estate investment looks like, you create a corporation. Using that corporation, you acquire some assets. It has some costs, which you want to minimize as much as possible. Maintenance. It has revenues like rent, receivables, or depending on how you use it. So if you can tokenize a private company, that same technology can actually be used to tokenize real estate, be it residential, commercial, and yeah, I think we figured out how to do it. It's just a question of regulation and what the right products are for different groups of customers.
I don't know why they do this. I couldn't tell you to save my life. Developers call it the future of property. But in practice, it's just Wall Street trying to wrap a sinking ship in blockchain packaging. You're not decentralizing ownership. You're just minting IOUs under a new logo. It's still fiat, it's still custodial, still dependent on the same courts and counterparties that caused this mess. You don't need to tokenize your house. Just price it in Bitcoin.
They're screaming for rates to be lower and maybe even artificially kept lower so that everybody can refi their house.
Right.
Like, what do you think the ramifications of that are going to be for the prices of homes long term? They're going to rip. They're going to rip even higher than what you're already, like if we jump 5 years into the future. So all of these things are a manifestation or an example of the currency melting down, in my humble opinion. And so, when people are like, oh my God, how in the world can anybody afford a house? Well, just go like price the house in Bitcoin for like the last 10 years every year. And what you're going to find is the price just keeps going lower and lower and lower.
Yeah.
And if somebody's like, what did he just say? Yeah, rewind the tape and listen to what I just said. The prices keep going lower and lower in Bitcoin terms. And it's just going to, in my opinion, it's just going to keep going that way.
Because when you price property in hard money, inflation distortion disappears. Suddenly, the market can't lie to you. It can't pretend that housing is booming when it's just the currency collapsing. You see real value instead of fake wealth. And that's the peaceful revolution. Truth in price, truth in value. Before we wrap, let's talk about where the signal meets the machines. Mining Disrupt 2025 is almost here, and you don't want to miss it. The biggest Bitcoin mining event of the year hits Dallas, Texas, November 11th through the 13th. The biggest names, next generation rigs, the merge of Bitcoin and AI. It's the signal you won't get anywhere else. Grab tickets with promo code SimplyBitcoin for 25% off, and we'll see you there. Okay, so here's the bottom line. Real estate is already down 90% when you price it in Bitcoin. Institutions are migrating to hard money. Fiat markets can't keep up. Bitcoin's still early. Tokenization? That's just coping in code.
Stop trying to make fetch happen. It's not going to happen.
If you want real ownership, hold Bitcoin in self-custody and start pricing your life in it. That's how you escape the illusion of getting richer while losing value. Would you rather own a rental property or a piece of the hardest money ever created? I know what I'm picking. But let me know in the comments. Don't forget to like, subscribe, and share this show with a friend who still thinks that real estate always goes up. It's always a very interesting conversation with them. I'm Sophie. This is Simply Bitcoin's Satoshi. And until next time, stack, slay, and stay bullish, baby.